Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, September the 20th. We had a little bit of price action, pretty much another benign day. Markets have been flagging since Thursday, and we had that little run up on Friday, and we have been just drifting lower on low volume this past week. Now, interesting developments overseas, but I'll get into that in a minute. But as you can see here, we have low volume pullback, which is bullish. We are hanging at the upper end of the range, which is also bullish. And we did bounce up. We were up about 50 points or so in the Dow, and then we sold off at the end of the day. But a very slow grind. There are not many long setups because the markets, again, need some sort of a rest or a pullback. But that doesn't mean that we can't play the markets. And we've been very, very quiet. Markets had some of the stocks had a decent run up. But again, guys, right now we don't want to be putting too much risk on the table. We want to let the markets digest whatever move, consolidate, whether it be sideways, which it has been doing and flagging a low volume. But it is a very, very crowded trade at the moment, and all we need is a little catalyst and the market to sell off, and a lot of market participants here take profits. Now, we did have a big run up, as we all know, and we are heading into the end of the month, end of the quarter. So they can, they meaning the larger hedge funds, mutual funds, can do a little bit of window dressing and push markets even higher, because I do think there's lack of performance where a lot of these major firms have missed a rally, and or if they are not positioned properly, they might be down slightly on the year. So we have the last quarter coming, and I'm sure they're going to do whatever they can to mark up this market itself. So that being said, although it is a crowded trade, and I do think risk is to the downside, that doesn't mean that we don't want to play the market accordingly. And what I mean by that is that we want to play what the trend gives us. Okay, now, yes, we are stretched, we are overbought, but that doesn't mean, again, we look for our long trades or look for something that's short that made its capitulatory high during the day. But as far as swing trading, me personally, I'm not doing so until this market can possibly roll over. Now, the problem with that is there are a lot of people looking for a pullback and waiting for the pullback. And when that happens, we usually go sideways, and then we break out higher. And then if we do break out highs, that'll convince me a little bit more to get long and be a little bit more aggressive to the long side. But right now we're at this conflection point, and I just personally I don't like taking additional risk if I don't have to. Okay, now, developments from last night, which is very interesting, and I keep talking about China, and I've mentioned a lot of followers that have been following me the last few months. I said we're going to have a nice big China trade. Now, that could be the canary in the coal mine I've mentioned before. China last night had their HSBC flash manufacturing PMI, came in at 47.8 versus 47.6. Okay, that's still a little bit better, but not as much. We're still in a contracting stage. And they were all looking for, meaning the analysts were looking for a big, meaningful bounce from last month's disappointing print, but did not have that. And what happened was a lot of Asian markets, they actually moved lower. Shanghai was down over 2%, 3.5-year low. I'll show you the chart, but you're not going to see last night's performance. But that is really a telltale sign that now China is going to be in big trouble, which is the second world's largest economy. So we're going to have to look out for that. Aussie dollar last night took a pounding, and a lot of the commodity currencies also started rolling over. So that is something that's in effect right now, but it's not really being paying attention to because of the fact all eyes are still on Europe. And as the euro rallies up at 130, 131, everybody's all bullish on the euro again. So very crowded trade, and things can change on a dime. There's going to be a lot of activity moving forward into this quarter, and I do feel so, and I'm going to really wait and see what happens so we can really get heavily involved. But until then, tides are changing, but slowly, and markets do top, and they top in a slower way than as they bottom. So just keep that in mind, okay? Now, as you can see here, we do have this big, long flag from Thursday's pop, Friday follow-through, and then, of course, a slow grind Monday, Tuesday, and then we had a little bit of a bounce here on Wednesday, and then market sold off towards the end of the day. So, to me, Bullish, price action bullish, and we have a lot of people bullish. And what happens is you can get that so-called, oh, I missed the rally, I got to jump in, and that can happen, and it could happen in a big way. So as of right now, we need to really either start taking out highs on volume, and then we can really get involved, and or we need to start breaking pivotal lows, and then we can see that, hey, the market's ready for a correction. I can easily see this market down 4% in a matter of weeks, easily. But again, guys, if you are long, and there are some people that look at the morning call email that have long-term accounts, my best bet still is I like to be hedged, and I would be looking for either puts. Volatility is very cheap, as you know. We're at extreme lows, and or sell calls against your long positions and collect some premium right now while the market is stagnant here. It's a great thing to do. And I had one guy said to me, "Oh, well, my puts will expire, worthless." Yes, and that's what insurance is. Insurance is when you pay for your premium. Obviously, you're paying your premium, and nothing happens to you. Well, you just. But the bottom line is that you're protected. You're covered. And that's what I would be doing if I had a longer term portfolio, which I do not. I'm not. I'm a day trader, swing trader, but I'm not holding anything at this juncture because the risk reward just isn't there at the moment. But again, if you're long lower, then yeah, sure, I would be looking for either buying puts or setting up a covered call portfolio temporarily, collect some premium while the market's just stagnant here. Okay. Anyway, enough for the 15-minute chart. I just wanted to show you how we're flagging in. I want to get into the some of these indicators, and we'll get into the indexes. Yesterday was such Monday was such a boring day. Yes, so yesterday's morning call really wasn't much of anything. But okay, so Shanghai, right? We're not going to see the Shanghai, but down 2% from here. Now we're down in this area here. This just does not look pretty, and I keep stating that, and the markets could totally ignore it, and that's fine. But I'm not going to ignore the fact that I need to tell everybody, watch out. This is something really that needs to be addressed. And we had that HSBC PMI come out a slightly better, 0.2% better than late yesterday. That's not enough to get me excited at all. Okay, let's talk about the VIX for a second. And I mentioned VIX. I always show you the VIX, but I want to show you another angle here. Here's a daily chart of the VIX. A little bit of inverted head and shoulders, left shoulder, right shoulder. I'm sorry, left shoulder, head, right shoulder, and then of course we have the slanted neckline. Okay, 200-day comes right above that, and we are within the Bollinger Bands. And as you can see here, if I come all the way back, there's a big trend line, and that trend line is holding up well. Now we are aligned properly for a bounce, and again with the dollar, and of course bonds, and of course the put call ratio, which I want to show you as well. You could see that. Now, this only triggers if we break the neckline, right? So we still got a little bit of way to go. But could be forming a head and shoulders. We are at extreme lows, and that's what really scares me as well. We have a big one-sided trade, which is on the long side, and people are just totally complacent. They're not worried at all. And this put-call ratio can show you that. Big bullish falling wedge. As you see, we broke out, fell back in. We're reading down at the 68th percentile. I mean, this is really low. We're at extreme lows here. So that means that the boat is one-sided. Everybody's long, and that's what scares me. When you usually get something at this juncture, something usually will razzle the markets to get everybody scared and get all the weak longs out. So just keep an eye on that. We look at the put-call ratio. I'll be showing you that. Now, the NYMO, I don't have it on because nothing really happened yesterday. We did roll a little bit. Down a couple of ticks, but nothing really happened. Nothing much on that. As you can see here, we're back at that 84th percentile here in the stocks above the 50-day moving average in the S&P 500, and we're starting to roll. So I'd like to see a nice, healthy pullback back to that 25-30% area, and then again with that happening, VIX popping, put call starting to increase a little bit, dollar starting to rally a little bit. That'll then get me saying, okay, we're getting a nice little pullback here, maybe a correction, and then we could start looking to buy some stocks. And then we could buy stocks with actually two hands. All right. Daily chart of the 30-year Treasury bond index. As you can see here, we held that 200-day nicely. That 150 was holding that bullish falling wedge. We did get the bounce and fail, and now we're back again, starting to rally. Dollar's up a little bit in pre-market this morning. So this is something here to keep an eye on as well. if you're not watching a dollar intraday and the euro, if you're day trading, you're crazy. You need to watch what the dollar is doing, the dollar index, and you look at the euro. You can look at the spot euro or the euro dollar itself. But I would definitely be looking at what's happening here, guys. Very, very important. Okay. Now take a look at the weekly chart. I wanted to show you. Look, the weekly chart uptrend still intact. We're just flagging here. Nice big flag, pop, and another flag, another bull flag. So the long-term trend is still intact in bonds. Whether QE is on and bonds are getting crushed, the weekly chart is still intact. And now, again, we are on Thursday, so pretty much to say if something dramatically doesn't happen, but we are still here in the bonds, still holding up well. Okay, and I wanted to, let's get into the charts now. Let's get into the indexes. Okay, weekly chart. I wanted to show you the weekly. We're right here. We haven't gone anywhere. Still an inside week from last week. Positive, holding the upper trend line, positive. But could this just be a big, large bear flag starting back from 2009? It sure could. And we have this nice little flagpole. Just something, this is just something to wanted to show everybody. But nonetheless, regardless of the flagpole, we're in a large channel here, 1455. And look at this channel, coincides nicely with the upper end, this higher price action of 1578.50. Okay, long-term chart, but I wanted to show you. Look at this. We're overbought here in our stochastics, so just keep an eye on the weekly chart. And again, I like to look at it Thursday, Friday, just to see where we are. Now, daily chart. Outside of the Bollinger Bands, we're pulling back ever so slightly. Low volume, bullish. Nothing you can say about this. But MACD stochastics are overbought here, so we want to really keep an eye on this. And I like looking at volume profiles on a daily chart, and really a lot of traders like to look at this, but really not much is talked about it. If you see how we have the volume in here, heavy volume, meaning heavy resistance, and that's why we hit this, and we kind of had a roadblock. Now we're above it. Now this volume profile gets really light up into the 1568 area, so if you don't think that the 1568 can get touched, I would be a pessimist about that. I would definitely say that the 1578 could be reached, and if we get a decent pullback into this area at the 1422, 1400, I think markets will be bought again if there's not a major, not something happening in the markets. Absolutely. So something really to keep an eye on. The target would be the high come the year-end rally. Okay. 60-minute chart. I just want to show you this flagging pattern here. We flagged, and a lot of 60-minute charts are showing that. And as you can see, we're just rolling back up here. But we're flagging, basically hitting and holding the 20-day moving average. As the 20-day gets flattened here, and you can see momentum has died. So we're either going to rally from up here or we're going to break lower. And the 30-minute chart, what I wanted to show you on these spiders, and this is just, again, daily spider. You can see how overbought we are with our Bollinger Bands on the daily. Look at the price action in the volume, really anemic. As you can see here, it's just literally since the middle of August, we just died. Other than, of course, Thursday and Friday, but we've actually just died here. Now, 30-minute chart. Bollinger Bands, as you can see, when they pinch, big move up. When they pinch, big move up. Now, we're pinching again. So is it the move's going to happen? Is it going to be to the downside or to the upside? And this is where I said markets are in an inflection point. And this is something that we really need to pay attention to. Okay, could it be the HSBC, the flash PMI in China? People are getting worried now, and then commodity stock starts to really hinder here to the downside, and then push all equities lower. That could be possible. So this is what I'm going to be watching in the coming days. Now we are in options expiration tomorrow, so anything can happen. Charts do get skewed, and a lot of the big players that are that write these options want the market usually to hang in here. So I don't see a big move today, tomorrow, but come next week, I do see some action starting to move, whether it be either to the upside and test the highs, and or the pullback that everybody's looking for. And again, guys, IWM, good measure of risk here. Had a really a decent day in the beginning, and then really market sold off all day. I was watching it. We're sitting right here on that doji star, so markets are starting to digest what's happening here. So keep an eye on the Russell, the IWM. Transport's really ugly, and I will mention one thing. Bed Bath & Beyond, a high retailer, big retailer, guided lower. Earnings came out horrible. And Norfolk Southern, NSC, big, big, big problem got smashed yesterday. Just as well as FedEx. FedEx did recover, but these are big bellwethers that gauge the economy, and they're talking about how transportation of lumber, coal, everything was lower. So this is a really big sign. Now FedEx, they recovered because okay, it's FedEx. You know what? They'll recover. Now you got Norfolk Southern stating the same thing. So this is something really interesting developments that are going to be happening in the next coming weeks. Apple, just wanted to show you Apple here. Really, I don't trade it, but really gone parabolic. Weekly chart really show you the same. But I wanted to show you what the Qs do because it's highly weighted in the Qs. Had that double top. We broke out a double top. Look at the volume, just dropped as we're moving higher here, overboard. So if you're trading Qs, you got to know what's going on with Apple. And here's the daily shot of the Qs. A little bit long on the video, I apologize, but we had some interesting developments, and I really like to address them to the guys that are ready to trade for the day. Okay, guys, be cautious out there. Let's see what happens. We're down about 5.5 handles in the pre-market. Let's see if that holds. And we'll see you tomorrow. Have a great day, everybody, and I'll talk to you tomorrow. Take care.